Hello, welcome to Harlem Lofts, Upper Manhattan Real Estate Market Report, Q1 2021. I have with me Gareth John, who runs our research. Behind the camera is Bestar Muyai, who does all the technical stuff for us. And I'm Rob Pear, the founder of Harlem Lofts. Been around 20 years and doing these reports for 10 or 12. So let's jump into the 2021 first quarter. And Gareth is going to tell you what we're going to do as far as the setup.
So yes, welcome to the Q1 2021 Upper Manhattan Real Estate webinar. The report that accompanies this webinar will be released tomorrow on Friday the 16th. The webinar and report are divided into three sections. We will analyze the townhouse market, then we'll analyze the condo market, and then we'll look at the current status of the market and the market trajectory going forward. So looking at the past, looking at where we are now, and then where we're going in the future. Okay, so let's jump straight into our data from the townhouse market. Rob, over to you.
Okay, so we divide, if some of you have seen our reports before, we divide into, is it 12 sections, 12 zip codes?
Yep.
It's all Upper Manhattan above 110th Street. So you'll see the zip code chart here. We start south and go north in our charts going forward to make it easy for you, and Gareth will give you the data on that. When we're looking at townhouses, there are no two townhouses that are the same. We start off with our 1 to 2 family homes, which are valued by square foot usually, and purchased with emotion. We have the 3 and 4 family houses and up. That's more investment properties. They are pretty much valued by cap rates, rate of return, and it's more of an investor play. And then you have what we call the curveball, which is a single room occupancy, which with the right paperwork can be turned into either of A or B. It could be a personal residence, single family, 2 family, or it could be turned into an investment property, but that's the one that needs paperwork. And that's, the SRO is indigenous to Hell's Kitchen in Harlem and Upper Manhattan. So you want to be careful with those, but they are great investments if you do it right. What do we have next, Gareth?
Okay, so let's compare Q1 2021 to Q1 2020, and then we're going to go back all the way to 2018, just to look at kind of longer term trends. So nice. In 2021, we saw 16 fair market value townhouse sales compared to 24 in Q1 2020, the same time last year, just pre-COVID. So that's a 33% decrease year on year. We saw 35.42 million sales volume versus $55.05 million this time last year. That's a 35.7% decrease. To put this in context, the Q1 2020 sales, 24 sales, was similar to Q1 2019 sales, 25 sales. However, COVID then hit and we saw a significant market pause or market hit. 35 sales through Q2 to 4 2020 versus 2019, 35 sales versus 63 sales in 2019. So that's a 44.4% decrease. So the market is recovering. We've gone from about a 45% drop. Now we're coming up to a 33% reduction. The market's gradually coming back.
I'd like to add something on that. So the first quarter, even though COVID hit in March and everybody ran out of the city at the end of March, those contracts were put in place in January and February. So March, we're a little over a year into this, but the first quarter of 2020 really wasn't affected by COVID because everything that closed, and they actually started virtual closings right off the bat with the new laws. So the stuff that was in contract did close in March. So first quarter, we had a full, real first quarter, and COVID literally started second quarter.
Just kind of going back over stuff. Q1 2020, 24 sales, $55.05 million volume. Very similar to Q1 2019, 25 sales, $58.3 million volume. However, COVID hit, Q2 to 4 2020, 35 sales, $72.8 million volume. That was 46.7 and 49.5% lower than 2019, Q2 to 4. 63 sales, $133.8 million. Q1 2021, 16 sales is still 33% down on Q1 2020, 24 sales. It's recovering. We're on the way back. We're not all the way back, but we'll get there.
So as we're going to talk about the townhouse sales, this particular report is going to be a little different than before. You know, we've been doing the reports for a long time. During COVID, we really nailed down on what's happening during that period. We did them every 2 weeks. But now that COVID hopefully is somewhat behind us, and it's been a year, we're going to go back to 2018, and then now we're in 2021 so that you can actually see the ebbs and flows. So Gareth, let's talk about
Sure.
as it pertains to 2018 to now townhouse sales.
Yep. So let's kind of look at sales volume quarter one 2018, 19, 20, 21.
Yes.
So 18, 19, 20, they were all very similar. We had 22 in 2018 quarter one, 25 in 2019, 24 in 2020. This year, 16. The market's still down by 33%. The market's coming back. As mentioned, it's coming back. It's not back. As you'll see, as we go into the condo market, which is more volatile, lower price per unit, higher units, the condo market's back. The townhouse market is trending back. We expect that it will be back by the middle of this year.
Can I ask you a question? On our report that we did last week, one thing that may not be reflective here and may confuse people is that we had more March contracts or more March closings
Right. Yep.
than the last 3 years. So
Right.
why does that
Okay.
explain
So
that?
so let's go into that. So in January we saw 3 recorded fair market value deals. February we saw 6. March we saw 12. So that's a kind of an exponential rise. That also suggests to us the market is gathering steam, and that's good.
Yeah, so more deals closed, to confirm, more deals closed in March of 2021 than the past 3 years.
3 years. Yep.
So,
Absolutely. So let's also that indicates that the market is fundamentally sound. It's recovering. It's coming back. Also, let's look at the average price and price per square foot in 2018 through 2021, quarter one each year. These have remained astonishingly stable. The average price in quarter one and price per square foot in quarter one 2021, $2.21 million, $518 per square foot, very similar to 2018, 19, and 20. As mentioned, we also, if we look at the number of properties going into contract, which we'll get into later, and the number of closed deals, if you put all of that together, it really tells us strongly that the underlying townhouse market is healthy, it's recovering. By mid-year, certainly second half of this year, we expect it to be back fully to where it was. It's not showing signs of growth, but following COVID, I think getting back to where we were is probably the most we can hope for this year.
disclaimer, this is our opinion. We
Correct.
cannot control the market. It is just our opinion, but we both agree on this.
Okay, so let's look at the properties that have sold and what has sold. Let's kind of break it down by kind of property class. We've got the residential, 1 and 2 family. We've got the 3, 4, 5, 6, 7 family rental investment properties, and we've got the SROs, which are kind of renovation investment. If we look at the data from sales of these 3 kind of subdivided groups, 2019, 2021, compared to 2018, 2019, in 2020, the 3+ family rental investment properties, sales of those rose. That was probably due to restrictive laws passed by New York City in 2019 that made it difficult for rental investors to upgrade large rental buildings. It didn't include the smaller rental investment townhouses. So investors tended to kind of move towards rental investment townhouses away from larger rental investment buildings.
Free market buildings it's easier to find a free market smaller building. There are
Right.
rent stabilized smaller buildings, but the ones we're speaking of were the free market small buildings, to be
Right.
clear.
That trend appears to have kind of faded in 21. So the trend for rental investments was increased in 2020, and then they've dropped in 2021. Conversely, residential townhouses dropped in 2020,
Yep.
and now they're coming back in 2021. So we're seeing two curves that are kind of complementary. Rental investment went up, now they're coming down. Residential went down, and now they're coming back up.
That's all you people that moved to the burbs, and now you're like, I should have bought in Harlem, and you're coming back buying 1 and 2 family homes. Thank you.
Now, let's look at what sold by location. In general, townhouse sales in Upper Manhattan are usually concentrated in the middle of the area. So we're looking at 2027, Central Harlem, 10030, North Harlem, and getting into 10031, which is Strivers Row, St. Nicholas Historic District, and the new Dorrance Brook Square Historic District, which should be coming online anytime now.
We have a listing there.
We do. Actually, we have 2.
Yeah, sorry. Sorry.
So in quarter 1 2020, and we're not really sure why, maybe investors got a little bit spooked by COVID, but the trend was for townhouse sales to move slightly south into East Harlem, 10029. However, this year, they're kind of coming back. The market's stabilizing and getting back to where it usually is.
And this is the chart that I mentioned. This is the zip code chart that goes, we've put it from south to north, right?
We have.
So when you're looking at these charts, you can see the trend moving from south to north, right?
Yeah.
As you said.
Yep. So we're the townhouse market, you'll see, is focused on the sales are focused on central Upper Manhattan. You'll see when we come to the condo market, it's all the way south. It's kind of an interesting kind of comparison. So let's summarize the townhouse market. The Upper Manhattan townhouse market was stable 2018 through quarter 1 2020. It then got hit by COVID-19 in quarter 2 to 4 2020. It's now recovering. It's not fully back. The trend is towards full recovery, but it's still about a third down. Stability of price and price per square foot also indicate underlying health of the market. Rental investment properties, 3 to 4 family, 5, 6, 7, were more popular in 2020, but probably due to the new rental laws that were passed in 2019. However, residential 1 and 2 family properties are now recovering their popularity. This is a good example of how Harlem Lofts analyzes the market carefully to optimize the objectives of our clients.
When you said 1/3 down, explain what that means. You said 1/3 down?
33%.
33% from not a price standpoint.
The same time last year in terms of the number of transactions and the sales volume.
Right. So number of transactions and sales volume are the same percentage, which means the prices are the same.
Exactly.
So it's just less transactions.
So we've hit the nadir, and now we're coming back up.
Awesome. All right. So the townhouses, that was exciting. The condominium market, we're going to get into next. If you hear a bunch of rain, it's because we're in our yurt outside of our office, and it's pouring down rain, and we are too busy to retape this. So we're going to keep rolling. A lot going on right now. So the condominium market, it's much bigger data pool. It had some major changes in September, October that we talked about. And I'm going to let Gareth get into the details of the condominium market. It's back.
Sure. Yes. So the condos, the value per unit is lower than the townhouse market. The number of transactions is higher. So what happens to the condo market? The townhouse market usually catches up, but the trends in the market in Upper Manhattan that we see, the condo market predicts what the townhouse market will do. So compared to quarter 1 2020, in quarter 1 2021, we saw 62 transactions versus 71 in 2020. That's just a 12.7% decrease. And we saw $56.9 million volume versus 60.9 in quarter 1 2020, just a 6.6% decrease. So that's not that big a change. If we put it into context, quarter 1 2020, we saw 71 sales. Quarter 1 2019, we saw 69 sales. So that was kind of even. Quarter 2 to 4 2020, 75 sales versus 155 sales. Quarter 2 to 4 2019, that was a 51.6% decrease. So the market for condos has dropped by half. And now it's almost all the way back.
And that's the amount of transactions. And then the sales volume was similar, right?
Yes. Yeah. 66 sales in quarter 4 2020, similar to quarter 4 2019, 69 sales, and now 62 in quarter 1 2021 versus 71 in quarter 1 2020. The condo market got hit harder than the townhouse market, but now it's almost fully
So this really recovered in December, is that right?
Yes.
The condo market recovered last quarter.
Yep.
And if you remember our October report, that's when condo inventory was at an all-time high.
Right.
So we were concerned. But as Gareth said then, inventory returns and the market returns.
Right. So I mean, if we look at condo sale for quarter 1 2018 to 2021, if you were to look at this graph and not at any other quarters, like quarter 2, 3, and 4, you really wouldn't be able to tell that anything happened. The condo market got hit very hard. Now it's back, and it's business as usual as far as we can tell. The average price for condos also shows stability over time. Price per unit 2018, 862,000. 19, 908,000, 20, 858,000, and 21. This is quarter 1 for each, 918,000. Very stable. It's we were hoping for growth, just as in the townhouse market. That hasn't happened yet. We expect it to happen. Disclaimer: we don't have a crystal ball, but we expect it may happen in the rest of 2021.
Tomorrow.
If we go to zip codes or transactions per zip code, as we just mentioned in the previous segment, townhouse sales tend to be focused on central, kind of upper Manhattan. The condo market is further south, 10029. 10026, 10035, 10027. That has been the trend for many years. 2020 and 2019, sales in 10026, which is southern Harlem, close to Central Park, these were kind of boosted by a couple of large condo sellouts. These have now sold out and by quarter 1 2021, and sales in 10026 have dropped, but the overall trend is very similar.
It's also to note, these are in Harlem. It's they're newer condos. So if you try to get gas today compared to 10 years ago, all the gas stations are gone because these are now condominiums
yes.
in 026 and then 27. So the inventory is in 26 and 27. That's why the sales are in 26 or 27. So the condo buyers are buying in those zip codes, but the developers had the foresight to know that this is the area that they needed to develop first. That you will see over time, this is going to move up to 3.1 and 3.5 because there's projects going on right now in those areas that developers had the foresight to see.
Let's quickly summarize the condo market. The market was stable 2018, 2019. Through quarter 1 2020, it then got impacted significantly by about half in quarter 2, 3, 2020 by COVID-19, but recovered quite well actually in quarter 4 2020, and that recovery has been sustained in quarter 1 2021. Price per sale has also been very stable over throughout that time. The recovery and the stability of price per sale indicates the underlying health of the market. This is another example of how Harlem Lofts analyzes the market to optimize the objectives of our clients. Okay, so the two first segments of this webinar showed us where we've been, where the townhouse market has been, and where the condo market has been, and the trends, towards recovery. Let's move on to where the market is. We've touched on where we've been. Now let's talk about where we are, and then let's talk about where we may be going. This is past, present, future. And
this is our monthly market updates that you have. We did one last Friday. This is what we talk about in those monthly updates, so keep an eye on those.
Yes, if we analyze market history and we look at current market status, this allows us to tentatively, disclaimer, predict future trends. Any prediction that we make is a best estimate and subject to market forces. Okay, so let's look at, firstly, one important marker is townhouse inventory. Classically, following a market downturn, inventory is the first marker of recovery. Townhouse inventory came back post-COVID. It peaked at 91 fair market value listings as of November the 18th of 2020, then decreased to 70 listings by December the 31st, and it's been stable 70 to 72 ever since. Demand has followed supply. However, like a duck swimming on water, even though supply has been stable since the end of the year, 15 to 18% of listings have turned over every month. For example, in March, 13 left the market, 6 went into contract, and 7 were delisted. 11 joined the market, 8 were brand new listings, and 3 were relisted. We know all of these listings. We follow them carefully, week in, week out. In March, there were 12 fair market value sales recorded. That's the highest number of sales in March for 3 years. There were 6 in February, 3 in January, so we've got an exponential curve. We don't expect that to continue, but it's kind of encouraging for those of us in the real estate market. We also break down listings by price and the number of days on the market. So, for example, on April 5th, last week, of the 70 properties on the market, 27 were priced or are priced still at $2 to $3 million. Less than 2 million and 3 to 4 have 24 and 16 each. There's only 3 above 4. And if we look at days on the market, the average is approximately 207 across the entire townhouse listings. The ones above 4 million have been on the market longest. The average is 449 days, and they haven't even sold yet. Yeah. Okay, so we have seen during COVID, we kind of started to track price and discounts. The market went on pause. People started to discount a little bit of the listing price. At the beginning of 2020, prices had gone up a little bit since 2018. I think people were expecting the market to come back and maybe kind of expand. There's been a bit of a correction. Since March 2020, since COVID hit, listings have increasingly offered discounts just to encourage sale. That started in the lower end of the market, 1 to 2 and $2 to $3 million, but now it encompasses the entire townhouse market. Currently, over half, 54.3% of listings are offering discounts compared to their initial listing price, and they average 11.94% of the original price, so about 12%. So the market's corrected, went up a bit in early 2020. Now it's come back to where it was in 2019. Okay. And it's the other thing to say is that while the rate of discounts in listings was increasing over time, right now it's kind of plateaued, and you'll see that on the graph that Bestar is going to kind of helpfully present for us.
And we also are noticing that other brokers are putting properties out now that we're watching, and they're putting them out at reasonable prices. They're putting them out at 2019 prices rather than first quarter of 2020 prices. So these discounts will probably dry up if the market stays steady.
Right, and in our next market analysis video coming out next month, we will have a graph that shows the average price per kind of sector. That's going to be good. Okay, so going from townhouses to condos, as mentioned, following a downturn, inventory is the first marker of recovery. Like the townhouse market, the condo listings recovered post-COVID, and they kind of overshot. They hit over 440 listings in October, which is I think that's
the most I've ever seen.
Yeah.
That was concerning.
Those have now, as the condo market has recovered fully, that's dropped significantly, and it's currently standing at 361 listings as of February, which is the most recent data point we have. So demand has followed supply. Okay, so let's summarize. Following COVID, inventory recovered, demand followed supply. In the townhouse market, we're seeing 15 to 18% of listings turning over each month, or at least from January through March, and we'll be following that closely. Townhouse recorded sales are increasing month by month. The condo market appears to be fully back.
All right, so thank you very much for attending our first quarter seminar for 2021. We are 1 year since we did our first YouTube video, right around there. So thank you. We'll be back on our monthly updates, and we'll also be back in July. If you want to see us there on our next quarterly report, go to YouTube, Harlem Lofts, and sign up for notifications and subscribe, and you'll get an alert when our next report is. And Gareth?
Yes, if on our website at harlemlofts.com, if you're a seller, please go to the Sellers tab for a free market valuation of your property. If you're a potential buyer, sign up to our tiered buyer program for early notice of upcoming listings. If you would like more information about the market, go to the Resources tab and sign up for our quarterly market reports.
Awesome. And I want to thank Bestar Moihai behind the camera there. He does all this work for us, wears many hats. And again, Gareth and his research department for all this data.
I mean, Rob and his sales kind of expertise over more than 20 years.
All right. So, and thank you for joining us. So we'll see you next time. Bye-bye.
Bye-bye.